The following is a presentation of TFNN.
Let's go to our first call of the day. We'll talk to John in Austin, Texas. How you doing today, John?
Way too good, Ken. Appreciate what you're doing. You do such a great job. This show is fantastic every day.
You're a good man, John. Really appreciate it. Thank you.
Live at TFNN, Breakout Investing, with your host, Ken Shreve.
Good afternoon, everyone. Welcome to another edition of Breakout Investing on TFNN. Ken Shreve with you. Great to be with you as usual. The number to use if you want to give me a call, talk about this market, 877-927-6648. You can catch my show daily on TFNN from 3 to 4 Eastern. The show is available as a podcast on iTunes if you can't listen live. And don't forget, you can listen to all TFNN programming on your smartphone. Been able to do that for a while. Great feature. Just open your smartphone browser, type in tfnn.mobi, and you can listen to the stream 24/7. Don't forget about Tiger TV as well on the homepage of tfnn.com. You can listen to the show live. You can also look at charts live right along with me on Channel 1. The show is archived on Channel 13, and if you want to watch Tiger TV on your smartphone, you can do that as well. Get a nice picture stream to your smartphone. Just, again, open your smartphone browser, type in tfnn.com. Over on the top right-hand side of the page, just click that box with the three mobile devices in there, and it'll recognize what kind of phone you have and start streaming for you. All right, well, it's been kind of a broken record here, but another constructive day of trading for the market. Checking in on the major averages here. NASDAQ Composite down about 3.5 points, trading in a tight range again, trading near its session low. It is right around 31.88. That's the last for the NASDAQ Composite. Then we move over, take a look at the S&P 500. It is trading in the top half of its range, up a little better than 2.5 points to 1519. So S&P 500 still acting well here, and inside the Dow. Check in on the Dow Jones Industrial Average, and we'll see that it too is trading up near its session high, up 51.5 points, 0.4%. So it is outperforming today. Last trading at 14,023. Inside the Dow, we did hear from Coca-Cola. Dow component Coca-Cola reported earnings. Kind of a rough day for the stock, as you can see. It is down 3.2% to 37.38. You can see a break below. You can see its 50-day and 200-day moving averages are pretty much in the same area. So you had a break below the 200-day moving average. It is sitting right at its 50-day line, which is at 37.36. And again, Coke last trading at 37.38. So a lot of big sellers in Coke today. The earnings were up 15% to 45 cents a share. Sales up 4% to $1.45 billion in North America, which is its biggest market by revenue. Volume rose 1%, basically helped by its Powerade sports drinks and bottled teas. But soda volume fell 2% in North America. So declining demand for soda continues to be an issue for Coke in North America. Remember, Coke also owns the Fanta, Minute Maid, and Dasani water brands. In Europe, Coke blamed an uncertain economy, bad weather, price competition for a 5% decline in volume, and volume fell 4% in China after growing 10% in the fourth quarter of 2011. So Coke definitely facing some challenges out here, and that is reflected in its price performance today, down 3.2% to 37.38. Taking a look at April gold today, up 50 cents to $1,649.60 an ounce. U.S. dollar index under some pressure today. Last trading at 80.07, down about 0.3%. Let's move over, take a look at the U.S. dollar index here. and this is U.S. dollar index as of Monday's close. But you can see, despite recent strength in the dollar, headed into today working on a 4-session winning streak, but trying to break out over a descending trend line here, but turned away. It closed Monday at 80.31. Again, it's down 0.3% today to 80.07 last check. So whether or not it's going to be able to break out over this descending trend line remains to be seen. Judging by its price action today, it is facing initial resistance there. So we will see what happens, but certainly continued strength in the dollar, no sure thing at this point. March crude oil ends at 97.51 a barrel, up 48 cents. Yield on the 10-year note at 1.98%. 30-year bond at 3.19%. Home builders having a really solid day today. We do own one home builder in the Ultimate Growth Stocks model portfolio. Nice to see that one bounce with conviction. Shares of the iShares Dow Jones U.S. Home Construction Index Fund up 3.7% today to 2351. So a little bit of juice behind the move here. Some top holdings of the ITB. Well, that includes Pulte Group, PHM, D.R. Horton. That is a stock that we are currently long in the Ultimate Growth Stocks model portfolio, and also Lennar. Those are the top 3 holdings. Let's check in on each of those stocks here. Pulte Group. PHM on the New York Stock Exchange up 5.6% today. Came down close to its 50-day moving average. You can see that right here. Stopped just short of it, but again, some good volume behind its move today, up 5.6% to 2038. D.R. Horton, a lot of these home builders had been under pressure heading into today. They hadn't broken down, with conviction, but D.R. Horton making a nice move today, a little bit off its highs, but still up $1.09, 4.8% to 24.01 after hitting an intraday high of 24.66. And also Lennar, L-E-N. Let's check in on Lennar here. We'll see a nice little bounce off the 50-day moving average for Lennar. It is up 4.1% to 40.88. So home builders doing well today. Goldman Sachs out with an interesting call. This is probably, partly fueling the home builder strength today. Goldman said that housing-related job growth is expected to accelerate this year and in 2014. Employment growth related to residential investment will accelerate to 25,000 to 30,000 jobs per month. That compares with an average monthly jobs of about 14,000 over the past year or so. So, we're talking jobs in areas like contractors, remodelers, furniture store employees, real estate agents, things like that. So pretty bullish comments today, at least in terms of the employment growth relating to continued improvement in the housing market. So that is giving home builders a good lift today. Financials also doing well here. Let's start by taking a look at the XLF, very liquid ETF. Remember we talked about all these stocks that really started to move back in early January. You had that big day for the market on January 2nd. Well, that's when the XLF broke out over 1670 here. As you can see, it has not looked back. So the breakout January 2nd clears a swing point of 1670, breaks out in heavy volume. It is up another 0.8% today to 1782. So financials, if you're a bull, you have to like the way these financials are trading. Many are extended and too late to buy, but others are extended but holding on to those gains, and they've started to move sideways. So you never know. You could see additional entry points in this sector in the not too distant future. Taking a look at some of my favorite names in the financial space, stocks we're watching here. Franklin Resources. This is ticker BEN on the New York Stock Exchange, another stock that is very extended here after a breakout in early January. So we'll look for a low volume pullback to support for BEN. It is up 1.3% today to 142. Also have Goldman Sachs. They're having their big technology conference in New York today. Goldman Sachs also very, very extended here. Another breakout January 2nd over 130. It's now at 153.83, up 1% on the day. T. Rowe Price, TROW, on the NASDAQ. Another stock that's looking strong here. But you can see the common theme among these financials. They all started to move on January 2nd, so you want to be careful of chasing them. Just because you miss an initial breakout, sometimes you can get alternate entry points. I'm not seeing them yet in many of these financials, but when we do get a market pullback, if it is just a temporary pullback, a lot of these financials should come into support and offer additional entry points. JP Morgan, another monster move, very extended right now. And finally, BlackRock. Remember, we had Keir McDonough on the show a couple weeks back, and he was pretty keen on BlackRock BLK, and BLK last trading at 239.80, up 35 cents on the day. But another asset manager here that has just moved sideways after recent strength and trying to break out. These things need to consolidate a little while longer. So I don't want to chase the financials here, but again, when they consolidate, pull back, take a breather, that is often when you can get new entry points. Just too early right now, so we'll continue to keep them on the watch list. Not much in the way of economic data today, but at 2 p.m. Eastern Time, the Treasury Department came out with data that said the U.S. government ran a budget surplus of $3 billion, the first monthly surplus since September 2012. Tomorrow we're going to get January retail sales. Overall sales should be up 0.1%, excluding autos, also up 0.1%. On Thursday, weekly jobless claims expected to fall 1,000 to 365,000. We'll get some manufacturing data on Friday. Empire Manufacturing for February, that will be out Friday. Industrial production capacity utilization, and also Michigan consumer sentiment for February. That also comes Friday. Mentioned the Goldman Sachs Technology Conference that's going on right now. A lot of bigwigs there. Marissa Mayer from Yahoo, John Donahoe, I think, gosh, I'm blanking out on his first name. I believe it's John Donahoe from eBay. Also there, and really the all eyes were on Tim Cook because he took the stage at around 10:15 Eastern Time, was asked questions by the Goldman analyst, talked about the David Einhorn situation. Of course, hedge fund manager Einhorn recently proposed that Apple perhaps issue preferred stock that would carry a high dividend. He's suing Apple because there's something and Apple wants to change in the charter that would allow them not to issue preferred stock. So commenting on Einhorn's lawsuit, Tim Cook called it basically a silly sideshow. Cook said that Apple's culture of innovation, quote, has never been stronger. Said the smartphone market would continue to be integral to the company's financial fortunes. Dominance in the tablet space represents a big opportunity for Apple as well, according to Cook. Apple's shareholder meeting coming up on February 27th. We'll could see what Apple does with its cash before then. We'll be right back, folks.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. With the launch of Tiger TV, TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, Ken Shreve, David White, Larry Pesavento, Victor Jones, or Daryl Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing.
You take a hands-on approach to managing your investments. And whether you're bullish or bearish on U.S. Treasuries, the ETFs from Direction Shares are there to help you magnify your perspective. Bull ETFs for a rising market and bear ETFs for a falling market. Direction Shares gives you the tools for both sides of the trade. Discover how we can help at directionshares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor Foresight Fund Services, LLC. McEwen Mining is a high-growth, mid-tier producer in the Americas with a market capitalization of $1 billion. Experienced mining executive Rob McEwen, as chairman, CEO, and president, owns 25% of the outstanding shares of McEwen Mining and has put in place an ambitious business plan with the goal of qualifying for inclusion in the S&P 500 by 2015. With $70 million in cash and liquid assets as of the end of 2012 and completely debt-free, McEwen Mining is poised for growth. Production in 2013 is forecasted to grow at 24%, reaching 130,000 gold equivalent ounces, and over the next 3 years, McEwen Mining projects that their production will increase to 290,000 gold equivalent ounces, almost a threefold increase from last year's totals. If you'd like to find out more about McEwen Mining, click on their banner on the front page of TFNN.com or check them out on the NYSE or TSX under the symbol MUX. David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
This segment is brought to you by Goldfields. For more information, just click the Goldfields banner on the front page of TFNN.com.
Welcome back, everyone, to Breakout Investing on TFNN. Ken Shreve with you. Just finishing up a couple thoughts on Apple. We haven't even checked on the share price today, but Tim Cook speaks at the Goldman Sachs Tech Conference, and the stock is down 0.2% to 469.40. Looks like its 3-session winning streak is in jeopardy here. Apple trading near its session low. Investors wanted something, again, I think with the shareholder meeting coming up on February 27th, there's a good bet that Wall Street's going to get some color on what Apple is going to do to return some cash to shareholders. We're talking about a $137 billion cash position, the vast majority of that overseas, so it's not quite that easy just returning cash to shareholders. If they're going to break some of that cash back, that is going to result in hefty taxes. So who knows whether it's in the form of a dividend increase. We'll see, but we'll probably get more color either before February 27th or at the shareholder meeting itself on February 27th. Tim Cook will be one of First Lady Michelle Obama's guests at tonight's State of the Union address. So look for Mr. Cook in Washington, D.C. tonight. All right, checking in on some other news-making stocks today. Let's take a look at Sinosure, CYNO. Nice move for this stock today. Again, giving back a lot of early gains here. Hits a high of 29.61, still up 3.5% on the day, but trading well in the bottom half of its range at $27.97. This is a small company with a market cap of close to $470 million. It makes aesthetic treatment systems for the dermatology and plastic surgery markets, and earnings up 238% from a year ago to 27 cents a share. That was 4 cents better than views. Sales up 25% to $42.7 million. That was above expectations of $41 million. So good beat on the bottom line and top line for Cynosure, and a nice little breakout today over 28, although again the stock has given back a lot of its early gains. I wanted to touch on Novo Nordisk yesterday. Didn't get a chance to, but we'll see. The stock is rebounding after a big gap down yesterday. Shares of Novo Nordisk up 2.4% today to $169.35. A big gap down for the stock yesterday. The company suffered a setback for its planned launch of new insulin products. The U.S. Food and Drug Administration, FDA, asked for further testing on the treatments. Specifically, the FDA wants additional cardiovascular data. So Novo Nordisk trying to rebound after a big percentage decline yesterday. Tech names still under pressure out there. Amazon.com got asked by Amazon yesterday's show, having a hard time at its 50-day moving average here. Doesn't look like it's ready to find support here. You could see a retest of the lows back here in late December, just underneath 245. Its 200-day moving average is down around 240. So, as I said yesterday, I'd be very careful of trying to catch the stock on sale here. Facebook, a current holding in the Ultimate Growth Stocks model portfolio, has given back some gains here. Not trading all that well. Actually, we did have a cushion in this stock, and now we're just slightly lower on the position. But the fact that it's below its 50-day moving average, probably going to have to keep this one on a tight leash. It is down another 3.2% today to 27.36. You had a breakout over 28.50 thereabouts. This was back earlier in the year. Earnings came out, pretty solid report, but the bottom line is that sellers have been in the stock for the past 2 to 3 weeks. Buying demand really seems to be drying up here. So it's a volatile stock, held to a high standard, all that good stuff, but never makes sense to watch a small loss get bigger. So we'll keep an eye on Facebook, and won't be afraid to cut ties with it. What we know right now, we just have to look at the facts. It is not acting right. Sellers are in control, and again, you never want to let a small loss get out of control. So I think we're probably down about 2 to 3% on our initial buy, and not going to let it go much lower than that. So we'll keep an eye on Facebook. Late Monday, reason for the weakness: Bernstein downgraded Facebook to market perform from outperform, and then a smaller boutique, BTIG, downgraded Facebook to sell from neutral. So that is kind of fueling the selling pressure in the stock. When we come back, we're going to take a look at earnings from Norwegian Cruise Line Holdings, recent new issue that has been wildly successful. Lots of other earnings reports, including another holding in the Ultimate Growth Stocks model portfolio that reported blowout earnings. Stock is up big today. We'll be right back, folks.
Tom O'Brien's weekly newsletter, The Gold Report, has helped subscribers for over 10 years navigate the high-risk world of exploring and producing gold companies. And now's a great time to sign up for a free month-long trial to see the kind of insight that Tom delivers for his subscribers on a weekly basis. Every Monday, Tom O'Brien issues a quick update on the metal market, giving you his take on the HUI, XAU, GLD, dollar, bonds, and much more. Tom follows Monday's update with a full gold report, which is delivered to subscribers Tuesday afternoon with detailed coverage of 24 separate gold or metal stocks, as well as another 10 to 15 stocks that he lets you know are on his potential watch list. Get your month-long free trial to the Gold Report today by visiting the front page of TFNN.com. Don't spend another year navigating the metal markets on your own. Act early in 2013 and make the most of your gold and metal market investments. If you're an investor looking for a great weekly investment newsletter, then now is the perfect time to try out Ken Shreve's Ultimate Growth Stocks. Every Tuesday, Ken breaks down multiple sectors in his weekly newsletter, Ultimate Growth Stocks, with a full in-depth report including specific trading recommendations within his model portfolio, charts, sector analysis, upcoming economic data, along with intra-week trading updates on newsletter positions whenever the market dictates. Right now, you can receive a full month, that's 30 days, to evaluate Ken's newsletter free of charge to see if it fits your trading plan. At less than $75 per month, Ken provides you with his expert trading advice that can pay for itself in no time. Take advantage of this great offer by signing up for a 30-day free trial to Ken Shreve's Ultimate Growth Stocks today. Don't let this offer pass you by. Visit the front page of TFNN.com and sign up now. Daryl Martin coined the phrase diagnostic trading, and we're happy to announce that his diagnostic box spread analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Daryl Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads.
Are you looking for a precision edge in the market? Something that can stack the odds in your favor? Then look into Larry Pesavento's new trading newsletter, Patterns, Profits, and Peace of Mind. In each weekly issue, Larry explains what's going to happen in the markets based on the pattern he sees developing and gives you actionable trade ideas based on those patterns. Plus, you'll get his detailed analysis on a variety of markets and sectors, including stocks, treasury bonds, the gold market, oil, the dollar, the forex market, and more. And you'll get the Technical Corner segment, which is a short but powerful weekly training session on trading. You'll get access to all the patterns Larry is seeing in the markets, plus the Astro Harmonics and powerful Bradley stock market model that Larry utilizes for less than $5 a day. An extremely potent combination that will give you just the edge you've been looking for. Try Patterns, Profits, and Peace of Mind absolutely free for 2 weeks. Go to TFNN.com and click on the free trial link at the top of the page. That's an $85 value, yours free when you register right now. Get Larry's Patterns, Profits, and Peace of Mind and get the edge you've been looking for.
This segment is brought to you by Direction Shares. To learn more about tactical tools for the sophisticated active investor, hit the Direction Shares banner on the front page of TFNN.com.
Welcome back, everyone, to Breakout Investing. Checking in on the Dow here. Almost 25 minutes left to go in Tuesday's session here. Dow Jones Industrials up 57 points, 0.4%, 14,028. So the Dow trading up near its session high. I think the same can be said for the S&P 500, also up near its high, up a little more than 3 points to 1520. And the NASDAQ Composite weighed down a little bit by Apple's underperformance today, near its session low, but still trading in a tight range, only down about 3 points to 3189. I don't think we've mentioned volume yet. We do have a little bit of volume in the market today. Yesterday, volume on the NASDAQ was below average at 1.53 billion. Today, we are tracking about 10% higher than that right now. So NASDAQ volume tracking higher than Monday. Again, volume was fairly light yesterday on the NASDAQ. It was very light on the New York Stock Exchange Monday at 495 million shares. It is tracking about 15 to 20% higher than that today. So that is that. All right, let's take a look at some earnings reports here. NCLH, Norwegian Cruise Line Holdings, very successful IPO for this company. in January at 18 bucks a share. It is now trading at 28.65 a share. Stock is up 3.5% today, trading in near its lows for the day, but numbers were pretty good. Stock did get an upgrade to buy from neutral at Nomura. They earned a penny a share. That reversed a year-ago loss. The earnings were in line with expectations. Sales up 3% to $503.2 million. That was a little bit below expectations, but I think investors more focusing on the upgrade to buy from Nomura. I think they're also focusing on bright growth prospects because the last I checked, full-year profit in, well, let me just check on that right now. Okay. Yeah, for 2013, so Norwegian Cruise Line made 83 cents a share in 2012. They just reported their fourth quarter full year results. Next year, or this year, 2013, they're expected to earn $1.26, which would be up 52% from 2012. And in 2014, growth is expected to accelerate, up 74% to $2.19 a share. So looks like there's a little bit of growth story here. And again, I mentioned on yesterday's show, I don't really understand the fundamentals of the cruise line industry. I know that prices have been very low. They're trying to get people to take cruises. That would not seem to be an ideal environment for profitability, but Norwegian Cruise Line Holdings, very successful IPO and market responding pretty positively to its earnings report. Investors also liked what they saw from Fossil. You know, I was in a Fossil store in a mall here in California. Very, very nice store. Nice product selection. Haven't seen that many Fossil stores. They have a few different arms to their business. Of course, they sell their watches to department stores, and but they also have brick and mortar locations that they're expanding. But very pleasant stores to stroll through. Fossil reported earnings of $2.27 a share. That beat views by a penny, up 21% from a year ago. Sales up 14% to $947.7 million. That was nicely above expectations. Fossil gaps up 3.3% right now, but trading at 110.96. It hit an intraday high of 115.19. So a lot of these gaps up in price today have been met with selling pressure. So that is something to be noted. Normally, I'm not afraid to buy a gap up. I want to see a few different things in place. I mean, a stock that has already run up a huge amount, hasn't really consolidated for that long, and is gapping up again. For example, Fossil, I would not have been a buyer today because this was not a base breakout, but when a stock is breaking out from a base, from a consolidation period at least 5-6 weeks old, buying a gap up can be very profitable. But Fossil down near its session low, and I would not call today a breakout because it was only a 2-3 week consolidation. The issue with Fossil is that they forecast earnings and sales in the current quarter below expectations, but maybe that's a reason why the stock is down after early strength. Another star of the day, but you're going to see a similar situation here. Michael Kors down after early strength. Still a very bullish move for the stock. I mean, make no mistake, up 8.7% to 61.98. This is has been a current holding in the Ultimate Growth Stocks portfolio for a while. So happy to see another big mover here. The numbers at Kors, I mean, I thought LinkedIn, we also have LinkedIn, and I thought the numbers were pretty exceptional at LinkedIn, and I have to say they may have been more exceptional at Kors. They made 64 cents a share. The estimate was for 41 cents, so 64 cents up 129% from a year ago. Revenue growth was just beyond wow. They did $636.8 million, up 70% from a year ago. The estimate was for $540 million, so they beat their top line by almost $100 million, which is Well, the analysts had it were way off, put it that way. But normally you don't see a beat that big, and same-store sales up 41%. So every metric that you look at Michael Kors, it's really hard to find anything wrong with this earnings report. So on a strong gap up on the volume that you see today, and again, volume in Kors right now at about 19.2 million shares. It normally trades about 3.7 million shares a day. So, it's 5-6 times normal. But the fact that it's trading near its low, it's not concerning, but, you want to see when a stock gaps up and there's good volume behind the move, you want to see buying demand sustained throughout the session, and that's what LinkedIn did when it broke out last Friday and actually followed through on Monday and still holding gains nicely. So it'll be interesting to see if we get some follow through for Kors. Normally, when you see a stock close off its highs on the day it gaps up, it can sometimes be hard for it to follow through. But either way, happy to own this stock. I think this one, similar to LinkedIn, has the look of an emerging leader, and just outstanding earnings from Kors earlier today. Wanted to take a look at Ruckus Wireless. We've been talking about this name. It continues to do well, outperform ahead of earnings after the close today. This is a company provides Wi-Fi systems to enterprise customers, also the telecom industry. Stock is up 7 cents today to $25.71. They are expected to earn 5 cents a share, up 25% from a year ago. Sales up 47% to $60.46 million. So optimism seems to be pretty high for Ruckus's earnings. Trades about 500,000 shares a day. Fairly small company, not tiny. Market cap of $1.9 billion. Technically acting very well ahead of earnings. So we're going to keep a close eye on Ruckus after the bell today and see what the numbers look like. Also, after the close today, we're going to hear from Rack Space Hosting. I like this company a lot. Just felt like I wanted to take some money off the table. It is so far firming up at its 50-day moving average here. Rack Space up 29 cents today to 75.32. Its 50-day line is at 73.66. So a little pullback to the 50-day. And we're going to hear from Rackspace after the close, with earnings expected to be up 17% to 21 cents a share. Sales up 26% to just over $355 million. Wall Street's going to be looking for an update, and they'll get an update on Rackspace, company's cloud computing software initiative called OpenStack, trying to become a standard here. Open source software for use in private and public data centers. Rackspace still derives the majority of its revenue from web hosting services. It has also become a pretty formidable player in the cloud computing space as well. GNRC, Generac Holdings. We're going to hear from Generac on Thursday. Stock was under a little bit of pressure today, firming up, basically flat on the day at 39.10. Still looking pretty strong here, holding above its 50-day moving average. In fact, you could see a little handle area form here after 4 straight gains. Again, it was lower yesterday. Volume came in lighter than the prior session, so it could just drift lower in light volume here. Not out of the question that you could see a technical breakout over its recent high of about 40.50 or so. Let me get that swing point for you. Call it $40. 41.40 would be the swing point that we're looking at here. But Generac, they make these home generators, power generators, seeing pretty strong demand. What with all the storms that we've been seeing in the U.S. lately, they're expected to do 69 cents a share. That would be down 9% from a year ago. Sales up 16% to $309.4 million. So we'll keep an eye on Generac this Thursday. Just talked about Racks reporting earnings after the close. Here's another data center operator, EQIX. They report after the close tomorrow. Equinix, and this is a company that is lower ahead of results, flirting with a test of its 50-day moving average here. Equinix down 1.8% to 214.20. Another strong quarter of growth is expected at Equinix. They operate they operate data centers. Again, reporting earnings after the close Wednesday. Earnings up 74% to 61 cents a share, with sales up 17% to $504.6 million. All right, so that is a look at Equinix. Some sellers in the stock, similar to Rackspace, but again, has not broken down yet. So a good name to keep an eye on here. Boy, that enthusiasm was certainly short-lived in Regeneron Pharmaceuticals. Yesterday, the stock, jumped up, made a move over 180. News that Sanofi is going to increase its stake in the company. Regeneron has some partnerships with Sanofi. But the stock closed near its session low, closed with a decent gain, but a lot of sellers in the stock, and technically looks very questionable at this point. Down 1.2% today to 168.23. We're going to hear from Regeneron before the open on Thursday this week. So another earnings report that should be interesting to watch. They are expected to earn $1.11 a share, reversing a year-ago loss. Sales up 219%, so there's definitely top-line growth going on at Regeneron, but look for sales to be up 219% to $392.6 million. Another decliner today, under notable pressure, CF Industries. We're not going to hear from CF Industries until next week, actually 1 week from today, February 19th. Stock under a lot of pressure today, down $5.41, 2.4% to 220.21. That's the last on CF Industries. This is a company makes nitrogen, phosphate fertilizers. A lot of fertilizer names, or a few I saw under pressure today. But CF Industries not looking all that great ahead of earnings next week on February 19th. Let's also take a look at NationStar Mortgage Holdings here. Don't have an earnings date yet, but again, it should be next week on or around February 19th. NationStar participating in the housing rally today, up 4.3% to 38.52. Keeping an eye on this one for a breakout. Fundamental story here. This one also has the look of, potentially an emerging leader here. Bright growth prospects, pretty strong technicals. Again, this is the way to, big profits in the market. Just identifying the stocks that have the potential to be leaders, looking at explosive earnings and sales growth in recent quarters, innovative new product or service. Are they institutional quality stocks? Are they showing relative price strength in the market? And NationStar Mortgage Holdings is another one that looks good on all of these fronts. So the swing point here is 40.61. Could see a little, I guess what we'd call a little pocket pivot here for NationStar Mortgage Holdings. I would put that right in the, the 39 area, and right now at 38.52, up 4.3%, technically looking quite healthy here. And Priceline, also wanted to take a look at Priceline. This one's gotten volatility not too bad. I thought it was a little more volatile than this, but this Priceline is interesting as well because it's a stock that's made a massive price move over the past few years, but you do have a pretty easy swing point to see here, 721.96. 721.96, that would be the swing point to look at. Priceline is going to be reporting earnings later this month, on or around February 25th. We don't have an earnings date yet, but earnings should be up 22% to $6.54 a share. Sales up 20% to $1.2 billion. Again, I've been saying, company with a market cap of $35 billion that is able to continually deliver the top line growth that Priceline has, very impressive. Good fundamentals still. We'll be right back, folks.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
With the launch of Tiger TV, TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, Ken Shreve, David White, Larry Pesavento, Victor Jones, or Terrell Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing.
Just recently, on December 28th, Market Insight subscribers were advised to go long the QQQ, the NASDAQ 100 ETF, on December 28th at $63.91, and only 2 trading days later, after a huge jump in the markets, Market Insight subscribers were advised to sell the QQQ at $66.64 for a $2.73 or 4.27% profit to start off 2013. At the same time, Tom O'Brien had advised his clients looking for a more leveraged trade that they could have initiated a position in the QLD, the ProShares Ultra QQQ ETF, and over the same 2 trading days, Market Insight subscribers were able to lock in a $4.48 profit or an 8.47% gain in just 1 trade. Get your 2-week free trial to Market Insights today by visiting the front page of TFNN.com. Cancel at any time during your free trial and pay nothing. Don't miss out on the next great trading opportunity in 2013. Act today.
Recently, Basil Chapman has had some outstanding trades in his newsletter, The Opening Call. Each morning by 9 a.m., Basil uploads his newsletter to the TFNN servers so that his subscribers can access his expert trading advice. Basil gives his take on the direction of key indices and updates any active trades that his subscribers are currently in. Just recently, Basil subscribers closed out a short position in Chipotle Mexican Grill, CMG, for more than an $86 profit per share, over a 20% gain in just 1 position. If you'd like to try out Basil Chapman's newsletter, The Opening Call, then visit the front page of TFNN.com and click Trading Newsletters. There you'll find Basil's newsletter, The Opening Call, where you can request a free sample copy. Also, don't miss Basil's program, The Tiger Technicians Hour, Monday through Friday, 11 a.m. Eastern, on TFNN. Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen, live during those shows, and have access to all those charts. You can test drive the Tiger's Den, absolutely free, for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. Catch Tom O'Brien, founder and CEO of TFNN, professional trader and educator. Also a special guest on CNBC, analyzing the commodity markets. Tom will bisect and dissect the markets. The Tom O'Brien Show, next on TFNN.
Welcome back, everyone. Yahoo CEO Marissa Mayer is speaking now at the Goldman Technology Conference, and we can see here Yahoo working on 6 straight gains here. Right now up 31 cents, 1.5% to 21.21. So apparently investors like what she is saying at that conference. Let's check in on the major averages here. About 5 minutes left to go in Tuesday's session. We've got the Dow up almost 49 points to 14,020. S&P 500 up about 2.5 points to 1519, 1520, thereabouts. Tech stocks still under a little pressure, lagging here. NASDAQ near its session low, down close to 6 points to 3186. Still very busy out there in terms of earnings. Got a bunch of earnings reports this week and next as well. After the close, railroad operator Genesee and Wyoming. Not your most widely known name in the railroad space, but still a very strong price performer. GWR on the New York Stock Exchange up 1.3% to 84.98 ahead of the results. We're also going to hear from Buffalo Wild Wings. BWLD. Big move for Buffalo Wild Wings ahead of earnings after the close, up almost 5% today to $80.64. Big volume move back above its 200-day moving average. So this one's not out of the woods yet. A lot of technical damage has been done to Buffalo Wild Wings, but bullish move for the stock ahead of earnings. And then another new issue here, TRLA. This is a speculative name. They basically are in the same kind of space as Zillow, online real estate data. Has been pulling back in light volume over the past 2 weeks, down 2.4% today to 23.92. Now the thing about Trulia is that it's speculative because of its size. Its market cap is about just over 600 million, trades close to 200,000 shares a day. It came public in September last year at $17 a share, and it's at $23.92, so has been a decent performer since its IPO. They're expected to lose 2 cents a share, but sales up 62% from a year ago to 18.99 million. Tomorrow morning, Wednesday before the open, let's take a look at Altisource Portfolio Solutions. Boy, has this stock fallen on hard times lately. Back in October, this was a $120 stock. It is now $83.84, down another 2% today, flirting with a break below its 200-day moving average, down at 81.21. Altisource, again, another real estate play here, mortgage, portfolio management services, related technology products. A lot of sellers in this stock in recent months. Maybe a lot of bad news priced in, but look for profit of $1.09 a share at Altisource, up 7% from a year ago. Sales up 13% to $148.6 million. And also before the open tomorrow, Deere and Company expected to earn $1.40 a share, up 8% from a year ago. Sales up 10% to $6.72 billion. Deere has a decent technical look here, holding nicely above its 50-day moving average. It is up 0.8% today to 93.97. So busy day of earnings tomorrow. After the close, some energy names, oil and gas producers, specifically EOG Resources, ticker EOG, and Pioneer Natural Resources set to report tomorrow after the close. Also, Cisco Systems, TripAdvisor, and Whole Foods Market. Coming up next, the Tom O'Brien Show. I'll see you back here tomorrow, folks, 3 o'clock Eastern, for another edition of Breakout Investing. Have a great day.